Hello fellow investors, I think my initial review of Beyond Meat stock was way too long, so I decided to make a shorter one. In this video I'll try to do a short summary of some of the key points. So, over the past year, interest rates have gone up from near zero to almost 5%. This has to affect companies' profitability, that's point number one, and this has also a negative effect on companies' valuation. However, for some reason, if we look at the general market, the S&P 500, for example, the S&P 500 PE ratio is currently standing at 22 points, while the median, all-time median is at 15. So there is a chance of the market correcting to 15%, to the level of PE ratio of 15%. And plus, companies' profitability again can and likely will deteriorate because of the high interest expenses. So there is a very, very, very high chance of a correction. I'm not saying it's imminent, anything can happen. However, there is just very high of a chance of a correction. Then, if you look at the S&P 500 index overall, we'll see that it has corrected over the past year while they were raising interest rates. However, it has corrected maybe by only 10% from its all-time high, which is obviously not enough when the interest rates go up 5 times from, well, let's say 1%, but actually near zero, to 5%. So again, the valuations do not make a lot of sense. The market is there is a very high probability that the market will correct further. Okay, so given the fact that I think that the market will correct, I'm looking for ways to hedge or protect my portfolio from a correction. That's why I started looking for some stocks to short. Before looking at Beyond Meat, I want to take a look at the story of a company from the same industry that is already going through a bankruptcy process. The very good food company. A Vancouver, Canada-based business. On the annual financial statements for the business, the last annual financial statements the company posted sometime in March of 2022, we can see that the company generated $12 million of revenue, and its procurement expense and fulfillment expenses, essentially the cost to produce the goods, the hamburgers, was more, substantially more, almost 70% more than the revenue generated by those hamburgers. So this business model obviously doesn't make any sense when you spend more money to produce goods, almost twice more money to produce goods than those goods bring you revenue. So it's, well, you're losing investors' money. It's a fake business model. On top of this, the company was obviously generating a lot of general administrative expenses, marketing expenses, R&D expenses, pre-production expenses, whatever that is. So it's a failing business model, at least for now. So this was my reason for looking at Beyond Meat, because the very good food company is already going through a bankruptcy procedure. So returning to the very good food company. If you look at the last annual financial statements for the Beyond Meat, you will see that the company, unlike the very good food company, actually generates gross profit margins. So they do make some or a little bit of money on each and every hamburger. However, the company also generates over $209 million, or generated in the last year over $209 million in general and admin expenses, which raise any profitability in the company at all. On top of it, we have R&D expenses, we have restructuring expenses. So the company has no chance, in the near future, the company has no chance of producing any income. It is draining cash, and it's draining it very fast. So another point is, if you look at the Beyond Meat's quarterly financial statements, we will see that on the last quarterly financial statements, which were as of October 1st, 2022, this data is on October 1st, 2022. So in its bank accounts, the company had $390 million, while in the past 12 months, it had a loss of $182 million. In reality, it had a loss, an operating cash outflow of over $300 million. More like, cash flow from operational activities was minus $300 million, and cash flow from investment activities was another $150 million. So overall, the company drained almost $500 million in the previous financial year. So if we again return to the current, the latest quarterly financial statements, the company has just barely enough cash to last for another 12 months. Assuming the company's management undertakes some serious measures and takes care of the draining cash flow, I would say that this business can stay afloat for another 12 to 24 months, because any measures that the management is going to undertake are likely not going to be sufficient, and the cash is still going to be drained, albeit at a somewhat slower pace, but it is going to be drained. So the business loses money, and it looks like a failing business model. Another point why this Beyond Meat is an interesting stock to short is its valuations. If you look at, for example, at Kraft Heinz company, which is a very old business with good financial statements, good and profitable business, it has a price to sales ratio of 2, while Beyond Meat has a price to sales ratio of 3. So the market values Beyond Meat 1.5 times more than Kraft Heinz. So it is a failing business model that is likely to go bankrupt in the next 12 to 24 months. And it is overvalued compared to its competitors 1.5 times. Its competitors that are going to survive for at least next 10 or maybe even 100 years. So Beyond Meat is very likely to declare bankruptcy, and at some point it is very likely that when its valuations are extremely cheap, that a company like, for example, Kraft Heinz is going to acquire it. But for now, it looks like a complete disaster and a good short opportunity. So that's it. That was my reasoning for shorting this stock. If you have any questions, please ask me. I'll try to reply you. I'll try to make more videos on oil and silver stocks as well. Thank you. Cheers. Goodbye.